The crypto world is littered with projects that promised much and delivered little. Many entered the scene with grand ambitions, seeking to revolutionize finance or solve complex technological problems. However, the reality is that a significant number of these ventures often fade into obscurity, leaving behind disappointed investors and unfulfilled potential. The digital landscape is filled with remnants of once promising cryptocurrencies that failed to gain traction or deliver on their initial hype. Yet, amidst this backdrop of fleeting projects, Pi Network stood out. It distinguished itself by letting anyone mine cryptocurrency directly on their smartphone, a novel approach that lowered the barrier to entry for countless individuals. There was no need for expensive hardware, those power-hungry mining rigs that consume vast amounts of electricity and require specialized knowledge to operate. And certainly no technical know-how was required. Users didn't need to be coding experts or blockchain specialists to participate in the Pi Network. Launched in 2019 by a team of Stanford University graduates, Pi Network aimed to democratize access to the world of digital currencies. Pi's vision was simple: make digital currency accessible to everyone, regardless of their technical expertise or financial resources. They sought to create a cryptocurrency that could be mined and used by anyone with a smartphone. Users, affectionately called pioneers, just tapped a button daily within the app to prove they were real, active members and engaged with the network. This simple action contributed to the overall security and validation of the Pi Network. This approach fostered the rapid growth of a massive global community spanning across continents and cultures. All this happened before Pi had any real-world value or exchange listings. This community-first, currency-second approach fueled explosive growth, attracting millions of users worldwide. But this unconventional model also sparked skepticism, with many questioning the true potential and long-term viability of the project. As years passed, Pi coins remained locked within the app, inaccessible for trading or spending. This prolonged period of anticipation led many to question whether Pi Network was a legitimate cryptocurrency project or simply an elaborate data grab designed to collect user information. Now, finally, in July 2025, the long-awaited Open Mainnet is live, marking a pivotal moment for the Pi Network. This launch is putting Pi's vision to the ultimate test, determining whether it can transition from a theoretical concept to a functional and valuable cryptocurrency. For the millions of users who diligently tapped that button daily, the central question is no longer what could Pi be, but rather, what is it now? Has it lived up to its initial promises, and can it establish itself as a viable player in the cryptocurrency landscape? In this video, we'll embark on a comprehensive exploration of Pi's journey, tracing its evolution from its inception to the present day. We'll delve into its unique mechanics, examining how it leverages smartphone mining and a novel consensus mechanism to operate. We'll also address the controversies that have surrounded Pi Network, exploring the concerns raised by skeptics and the challenges it has faced along the way. Ultimately, we'll assess whether Pi Network has finally delivered on its promises and whether it can carve out a sustainable future in the ever-evolving world of cryptocurrency. Let's dive in and uncover the story of Pi Network. Pi Network's mobile mining is nothing like Bitcoin's energy-hungry process. Instead of solving complex math, Pi uses the Stellar Consensus Protocol. Users check in daily, building a web of trust rather than burning electricity. The app rewards social engagement, not computing power, making crypto accessible to anyone with a phone. This simplicity drove viral growth, especially in developing countries, but also drew criticism. Detractors argue Pi's mining is just an airdrop, no real work, no inherent value, just numbers on a screen. Supporters see it as a clever way to build a massive, engaged user base. The debate: is Pi a revolutionary on-ramp to crypto or just a social experiment with no substance? As the Open Mainnet launches, the answer will finally be put to the test. The world is watching. Pi Network's journey has been a marathon of waiting. Launched on Pi Day 2019, it quickly grew to millions of users, all mining tokens that couldn't be traded. In late 2021, the enclosed Mainnet went live. Real blockchain, but walled off from the outside world. Users who passed KYC could move their Pi to wallets and transact with others, but still couldn't cash out. Frustration grew as KYC rollouts lagged and the ecosystem developed slowly. The core team insisted on building real utility and regulatory compliance before opening the floodgates. Now, after 6 years, the Open Mainnet is finally here, ready for the ultimate test, the open market. The wait is over, but the real challenge begins. The enclosed mainnet was Pi's sandbox, a closed economy where users could transact but not trade Pi on exchanges. KYC was mandatory, ensuring one person, one account, and compliance with regulations. Pioneers could send Pi to each other, and developers were encouraged to build apps and services using Pi as currency. Hackathons and the Pi browser aimed to spark a real economy, with users bartering everything from digital art to electronics. But progress was slow. KYC bottlenecks and limited app adoption left many feeling stuck. Without a market price, Pi's value was whatever users agreed on in trades. The walled garden fostered some utility, but anticipation for open trading only grew. The stage was set for the next phase. July 14, 2025, Open Mainnet launches, and Pi's firewall drops. Pi can now be listed on exchanges, traded for other cryptocurrencies or fiat, and integrated into external apps and businesses. The core technology remains, but the network's connectivity changes everything. For users, Pi is no longer locked in the app. They can trade, spend, or hold as they wish. But with freedom comes volatility. Pi's price will be set by global supply and demand, not private bartering. The core team urges focus on utility, not just speculation. Users must now manage their assets in the wild world of crypto, learning to navigate exchanges and security risks. The training wheels are off, real consequences begin. With Open Mainnet Live, the debate is fierce. Did Pi deliver? Supporters say yes. Pi made crypto accessible, built a huge community, and launched a real blockchain with utility. Years of slow, careful rollout and KYC are seen as responsible, not stalling. Critics argue the wait was too long. Mining was a gimmick, and value is driven by hype, not innovation. They worry about a massive sell-off and question the centralization of power in the Pi core team. Is Pi truly decentralized, or just another project controlled from the top? The answer depends on how the network evolves in the open market. Only time and the community's actions will tell if Pi's promise holds up. The experiment is now real. Now, Pi's strengths and weaknesses are on full display. Its biggest asset, a massive global user base, tens of millions, all KYC verified. The mobile-first, easy-to-use approach brought crypto to people who'd never touched Bitcoin. This reach, especially in emerging markets, could drive real-world adoption and financial inclusion. But Pi's economy is untested. Most coins were earned for free, creating huge selling pressure. If utility doesn't develop fast, the price could crash. Centralization remains a concern. The core team still holds much power. For Pi to succeed long-term, governance must become more decentralized and community-driven. The next chapter depends on whether users build real value or just cash out and move on. The world is watching Pi's grand experiment unfold. Open Mainnet creates winners and risks. It's a pivotal moment where fortunes can be made or lost, depending on strategy and timing. The inherent volatility of the cryptocurrency market adds another layer of complexity, making it crucial to understand the potential outcomes. This new phase presents both opportunities and challenges for both early adopters and newcomers. Each group approaches Pi with different perspectives and expectations, shaping their decisions and influencing the market dynamics. Early pioneers with years of daily taps, diligently accumulating Pi, now stand at a crossroads. Their commitment and dedication have positioned them as key players in the Pi network. They hold the most Pi and face the biggest decision, whether to capitalize on their early efforts or maintain their stake in the network's long-term vision. This decision carries significant weight, impacting not only their personal finances but also the overall stability and growth of the Pi ecosystem. Will they sell now for quick gains, taking immediate profits from their mined Pi? The allure of instant gratification can be tempting, especially in a volatile market, or hold for future growth. Believing in the long-term potential of PE and its underlying technology requires patience and a willingness to weather potential market fluctuations. For many, especially in developing regions where access to traditional financial systems is limited, even a modest price could be life-changing. The potential to improve their economic circumstances and gain financial independence is a powerful motivator. But selling en masse could crash the price, creating a downward spiral that hurts everyone involved. The collective actions of early adopters will significantly influence the initial market value of Pi. While holding is a gamble on Pi's future, betting on its adoption, utility, and the overall success of the Pi network. It's a long-term investment with inherent risks, but also the potential for substantial rewards. Newcomers, meanwhile, entering the Pi network at this later stage, must buy Pi on exchanges, facing the challenge of acquiring Pi at a potentially higher price than early adopters, or earn it through the ecosystem, actively participating in the Pi network and contributing to its growth. They have no emotional baggage, no years of mining or attachment to the project's early stages, just a clear view of the risks and rewards, allowing them to make objective decisions based on market analysis and potential returns. Their best move, the most prudent approach for newcomers, wait for the hype to settle, allowing the initial frenzy surrounding open mainnet to subside and the market to stabilize. Then decide if Pi's utility justifies the price. Assessing the real-world applications and value proposition of Pi will be crucial in determining its long-term viability. Early adopters shape the market's first moves. Their actions will set the initial price and influence early trading patterns. Newcomers will decide if Pi has staying power. Their adoption and usage of Pi will ultimately determine its long-term success and integration into the broader cryptocurrency landscape. The balance of risk and reward is shifting, creating a dynamic environment where both early adopters and newcomers must carefully weigh their options. After 6 long years of development, anticipation, and community building, Pi's open mainnet is finally live. This marks a significant milestone for the project and its millions of users worldwide. The launch represents the culmination of countless hours of work, dedication, and a shared vision for a more accessible and decentralized digital currency. With the open mainnet now active, Pi tokens are no longer just numbers on a screen. They are real, tradable assets, capable of being exchanged for goods, services, or other cryptocurrencies on various platforms. This transition from a closed network to an open ecosystem is a crucial step in establishing Pi as a legitimate and functional digital currency. But the big question on everyone's mind is, was the wait worth it? Did the years of mining on smartphones, the constant engagement with the Pi community, and the unwavering belief in the project's potential finally pay off? For some, the journey itself, the process of being involved in something new and innovative, learning crypto, understanding blockchain technology, and joining a global movement of like-minded individuals, was the reward. The sense of community and shared purpose was valuable in itself. Financially, however, the verdict is still unfolding in real time. The true value of Pi will be determined by market forces, adoption rates, and the overall success of the Pi ecosystem. If Pi's price holds steady or even increases, early adopters who diligently mined Pi over the years stand to win big, potentially reaping significant financial rewards for their patience and commitment. But if not, if the price plummets or fails to gain traction, it's a lesson in the volatile nature of cryptocurrency, the power of hype, and the importance of managing expectations and practicing patience. Beyond the potential for financial gain, Pi has already achieved something remarkable. It introduced millions of people around the world to the concepts of cryptocurrency and digital wallets, significantly boosting financial literacy worldwide and empowering individuals to participate in the digital economy. The project's strengths are undeniable. It boasts a huge and dedicated community, offers easy access through a user-friendly mobile app, and provides a relatively simple and intuitive digital wallet experience. However, these strengths are matched by inherent risks and challenges. Pi remains an experimental cryptocurrency, operating within an untested economy and with relatively centralized roots, raising concerns about its long-term sustainability and decentralization. Therefore, the payoff isn't guaranteed riches for everyone involved. Instead, it represents a shot at shaping a new digital economy, a chance to contribute to a more inclusive and accessible financial system. Pi's value now depends heavily on what the community builds on top of the platform, the applications and services they create, and the overall utility they bring to the Pi network. Ultimately, its success will depend on how the broader market responds to Pi's unique approach and whether it can overcome the challenges it faces. Whether it ultimately becomes a revolutionary force in the world of cryptocurrency, or serves as a cautionary tale about the complexities of building a digital currency from the ground up, Pi's saga is undoubtedly a landmark moment in crypto history, a fascinating experiment that will continue to unfold in the years to come.